11:47 on a Tuesday, you open your bank app. $342.18. Rent is $1,400. Posts Friday, and right under the balance, the bank has charged you about $14 for the privilege of not having enough money. You stare at the number. The math doesn't move. The math hasn't moved in 6 months. Somewhere in the same city, someone else is opening the same bank app. $12 million, same bank, same app, different universe. No service fee, no overdraft warning, no phone tree, just a private number that reaches a human in 2 rings. You are using the same institution. You're not using the same product. The bank you experience is decided almost entirely by the number next to your name. In the next 10 minutes, I'm walking you through 6 wealth tiers this country's banks actually operate. The real fees at the bottom, the real bonuses near the top, and the one threshold where the math flips, where the bank stops charging you to stay and starts paying you not to leave. That line is not where most people think it is. Stay with me. Tier 1, $0 to $500. This is where tens of millions of Americans pass through financially, even if almost nobody says it out loud. According to the Federal Reserve's most recent survey of consumer finances, the conditional median household retirement savings is around $87,000, but the median checking account balance is $2,800. And for households living close to payday, the real number on the wrong week of the month can be much lower. At this tier, the bank does not know your story. It does not know that your paycheck lands Thursday. It does not know that rent pulls Friday. It does not know that the dentist bill wasn't optional. It knows one thing: the number. The average overdraft fee is around $27 per incident, according to Bankrate's 2025 checking study, while Money Rate's survey puts the figure closer to $33 at major banks that still charge higher fees. Maintenance fees can sit around $14 a month. And CFPB research found that a small group of consumers, people paying more than 10 overdraft or NSF fees a year, paid 79% of those fees with a median annual cost of $380. Read that again. 9% of people pay nearly 4/5 of the entire industry's overdraft revenue, with a median cost of $380 a year, not for a luxury, for the privilege of being briefly negative. That is the part most people miss. The fee is small enough to look boring, but frequent enough to become a system. At this level, the bank relationship is not personal. It is automatic. You are not greeted. You are processed. You are not courted. You are sorted. Tier 2, $500 to $25,000. This is the tier where things stop actively hurting, but they do not start helping yet. You clear the basic fee hurdles. You keep enough money in the account that the system stops charging you for simply existing. Bankrate has found that the average minimum balance needed to waive certain maintenance fees is in the hundreds of dollars, not the thousands. So the first upgrade is not luxury. It is silence, no overdraft alert, no maintenance fee, no panic when the app opens. But silence is not the same as respect. At this level, you are useful enough to keep, but not valuable enough to pursue. The bank can earn something from your deposits, your debit card activity, and maybe a credit card or loan later, but you are not the relationship they organize themselves around. That is why this tier feels strange. Nothing dramatic happens. Nobody insults you. Nobody ignores you completely. You are simply moved through like luggage on a belt. And for most middle-class customers, that is what banking feels like. Not cruel, not generous, just efficiently indifferent. Before we move into the tiers where the bank starts chasing you, I want to be clear about what this video is and what it is not. I haven't worked at these banks. This is not insider gossip. This is what becomes visible when you read the public documents most people skip: bank published account terms, FDIC call report data, CFPB enforcement actions, investor presentations, and reporting on internal banking materials when those materials surface publicly. The tier system is not hidden in a vault. That would almost be easier to understand. It is published in plain sight. The trick is that almost nobody wants to spend a Saturday reading the fee schedule of a bank account they already hate. So I did. Back to the tiers. Tier 3, $25,000 to $150,000. This is where the bank begins to look at you differently. Not because you became more interesting, but because your account did. Bank of America's Preferred Rewards Gold tier has activated at $20,000 across linked accounts for years. Though the bank is rebranding the program to Buffet Rewards in late May 2026, with the entry-level member tier shifting to a $30,000 threshold. Either way, at this range, you start receiving small benefits, rate boosts on savings, reduced loan rates, ATM fee relief, credit card bonuses. Wells Fargo, Citi, and most major banks have similar tiered systems that activate somewhere between $20,000 and $50,000. None of this feels dramatic when it happens. You do not get a parade, you get a slightly better email, an envelope with heavier paper, a subject line with your first name, a banker you have never met, named Brandon or Stephanie, writing as if the two of you have history. That is not an accident. The marketing departments at major banks have measured exactly how much heavier the envelope needs to be before you open it, instead of throwing it out. There are entire studies on the question. At this range, the bank has more ways to make money from the relationship: deposit float, lending, card activity, investment referrals, and eventually wealth management products. The important part is not that the bank suddenly loves you, it is that you have become worth tracking. And once a bank starts tracking you, the relationship changes. Not loudly, administratively. Which is often how money changes your life first. Pause here for a second. The thing I want you to notice is that bank fees are not just fees. They are also sorting signals. The maintenance fee, the overdraft, the wire transfer charge, the slow phone line, those are not random annoyances floating around the system. They are part of the system's way of deciding which kind of customer you are. At the bottom, the fee asks, can this person absorb pain? At the top, the bonus asks, can we afford to lose this person? That is the whole game. If this is the kind of money content you want more of, the actual structure underneath the polished brochure, that is what I am building here. Subscribe and we keep going. Now back to the number in the title. Tier 4, $150,000 to $1 million. This is where the math reverses. And this is the threshold I named in the title because this is the first place where the bank's behavior becomes almost funny if you look at it too directly. At Chase, $150,000 is the threshold for Chase Private Client. Below the qualifying balance, the private client checking account can carry a $35 monthly service fee. Above the threshold, that fee disappears. But the fee disappearing is not the punchline. The punchline is that at the same threshold, Chase may pay you a $1,000 bonus just for moving money in. Move $250,000 and the bonus can rise to $2,000. Move $500,000 and it can rise to $3,000. Those are Chase's own published bonus tiers. Let me say that plainly. At $342, the bank may charge you because the number is too small. At $150,000, the same bank pays you because the number is finally useful. Same institution, same app, same building, different gravity, and once you see that, the whole video changes. The separate phone number, the faster response, the banker who calls you back, the fee that suddenly becomes reversible. None of these are random favors. They are the visible part of a calculation. At this threshold, structurally, you stop being a small account to manage and start becoming a relationship to retain. Tier 5, $1 million to $10 million. At this point, banking stops feeling like customer service and starts feeling like account management. You do not just have a banker, you have a relationship manager whose job is to keep your money inside the institution across checking, savings, mortgage, investments, lending, sometimes insurance, sometimes your children's future accounts. UBS publishes high net worth client tiers beginning around $1 million with private wealth services at much higher levels. Morgan Stanley, private wealth and similar divisions operate in this same world of large investable assets and long-term relationship value. The bank is no longer trying to make $35 from your wire transfer. That would be too small. Now the money is in keeping you for 10 years, in managing assets, in originating loans, in holding deposits, in becoming the financial default setting for your family. That is why the service changes, not because wealth makes someone morally better, because wealth makes them harder to replace. Tier 6, $10 million. And this is where the bank no longer competes for your transaction. It competes for your trust. According to Wall Street Journal reporting that cited JP Morgan internal presentations, roughly 90% of JP Morgan private bank clients had more than $10 million in assets with the bank when the threshold was raised, and that $10 million floor remains part of how the institution publicly frames the private bank relationship. At this level, the card is heavier. The meeting comes to you. The conversation is not about whether you can afford a product. It is about how the institution can fit itself around the next 30 years of your life. At the bottom, you adjust yourself to the bank. At the top, the bank adjusts itself to you. Now back to the open loop from the beginning. The most important threshold is not $10 million. That number is too far away for most people to feel useful. It is not $1 million either. That is still the number everyone already understands as rich. The more interesting line is much earlier. It is the move across $150,000 to $250,000 in liquid or linked assets. That is the zone where the bank's relationship to you visibly begins to invert. Below that line, the bank can make money from small fees, slow service, and basic account activity. Above that line, the bank has a new incentive: keep you, court you, waive things, call back, offer bonuses, make the relationship feel sticky enough that you do not move the money somewhere else. And that is the part most people never see. The threshold where banking starts changing is not private jets, family offices. It begins at the first point where your account becomes more valuable than your fees. That is why 150,000 matters, not because it makes you rich, because it is the first number where the bank starts acting like losing you would hurt. 11:47 on a Tuesday, somewhere right now, someone is opening a bank app, $342.18. Rent is $1,400. Post Friday, they stare at the number. The math does not move. They do not know yet that on the same app, inside the same bank, somewhere across town, there is another version of the institution, a version that does not charge the fee, a version that answers in 2 rings, a version that pays people to arrive, not because those people are better, because their number crossed a line. The bank was never one product. It was a staircase pretending to be a front door. That is how banks behave at the consumer tier. That is the part I want this channel to keep looking at. Not the loud money advice, the quiet rules underneath it. If that is the kind of finance you want more of, subscribe. I'll keep reading the fine print.